Hello and welcome to Discipline and Strategy for the Master Trader. You have myself, Simon Klein, and Norman Hallett. So welcome everybody.
I'm discipline and he's strategy.
So what we're going to do, just the events of today, we're going to start off. I'm going to talk about strategy and how to go about building a trading strategy. Hi, Todd. And then I'm going to pass over to Norman, who's going to take you through how to be disciplined at following your strategy. How to build a profitable strategy step by step. So just a quick disclaimer, just bear in mind, all comments I make here for educational purposes only. You all know there's a high degree of risk involved in all types of trading, and we're not responsible for your trading and investment results. For those of you who are new here, there's a little bit about me, and you can read that. But just to tell you about TradeSmart, we're a trading education business that primarily focuses on teaching you how to read the market professionally and how to run a successful trading business, including how to develop your own trading plan and strategies which fit your personality and lifestyle. Here's a picture of me giving a talk at the New York Traders Expo earlier on this year. Trading is a business, so treat it as a business. Hobbies cost money, businesses make money. We've got to make sure that we're approaching our trading in the right way. So here's our agenda. I'm going to take you through a little bit of an introduction to professional chart reading, and then we're going to take that and I'm going to discuss how to define your edge once you know how to read the market a little bit, and then how to establish a profitable trading strategy, and then the steps you need to go through in order to build a profitable strategy. So professional chart reading, slightly different to what you may find in the books. I believe that you only need to learn 3 primary analyses. Number 1, pivot analysis. Understand how to read the trend using pivot analysis, the candlesticks alone. Number 2, how to identify where supply and demand is in the market. Where are supply and demand zones? And again, that's not joining peaks and troughs. I'm going to show you, I'm going to jump to the live chart straight after this. And I'm going to show you some examples from today's trading. And then we're going to go, the third thing that you need to understand is price direction analysis. Understand what direction is price currently moving. And you need to understand all of these 3 things in multiple time frames so you can build high probability scenarios or high probability ideas of where the market's likely to go next. As in, if you're in an uptrend, where's that trend likely to end? And trends, like most of the time, begin and end in areas of supply and demand. And if you understand price direction, you can understand which direction price is moving. So again, the beginning stage of every trader, if you're becoming a trader based on chart reading, is to learn how to read the charts. And I believe once, and this is a quote at the bottom here, the charts will teach you all you need to know once you have a framework for reading them. If you have that framework in place, then you can apply that framework to any chart, any time frame. It doesn't matter. As long as you can chart it, you can understand what's going on in terms of supply and demand, trend, and price direction on multiple time frames. And once you have that framework, the market begins to teach you. The market will speak to you. You'll be able to understand the language and understand what's going on and understand when the market's showing high probability trading scenarios. So let's jump straight into the live market, and I'm going to show you some examples from today. Now, here's an example from today on the pound. This is an area of supply, for example, and the market moved up. Once you know that this is a supply area, then when the market moves up into this area, and if you look on the daily chart here, you see we have price direction pointing to the downside. So today it's highly likely we may go down. So on the lower time frame over here, you want to watch what happens when the market gets up into supply. Now, if you want to look at the 15-minute chart, the trend changes here and it starts to set up for lower low, lower high, lower low, lower high. As you can see over here, we start to set up a downtrend and now we're kind of chopping sideways. So that's an example from today of how you can actually use this analysis, multiple time frames, understand directions down here, we hit supply over here, the trend changes here. Put it all together, you've got a high probability scenario to be on the short side, and this is a trade that we called out in our trading room, looking for short on here. Gold, I'll give you one more example from today. Gold, sideways market on the daily chart. Today we moved up to supply in a sideways market and also consolidated sideways and then broke down and kicked off this downward move. So today was a short trade on gold until it hit demand, which we are in now. And you can see that's exactly identifying the type of market you're in, the location you want to enter your trade, and understanding how you're going to enter the trade, exit the trade, manage your risk, and everything else like that. So everyone learns. This is for all the beginners here. Just quickly go over Japanese candlesticks. They basically show 4 prices: the open, the close, the high, and the low. And if it opened, for example, here and closed below the open for the period, it usually means a bearish bar. It could be whatever color you choose to denote closing below the open. So, and then the high and the low. That's just for a quick introduction, so I don't leave anyone behind. And these are 2 very important candlesticks that you need to learn. These are probably the most important candlesticks. The one on the left, and again, if you know what it is, just type it in the room. The one on the left is the hammer, and the one on the right is the shooting star. Now again, if you learn how to read the market from a very superficial standpoint, you're taught that this is a bullish candlestick. Actually, there's many times where this candlestick actually is a bearish candlestick and you want to be on the sell side. And likewise, this is a bearish candlestick, you're taught most of the time. But there are circumstances and scenarios in the market where if you recognize this candlestick in that scenario, it's actually bullish. And we go over many of those examples in the live trading room on a day-to-day basis. So it's not just learning from the books, hey, when you see a candlestick like this, it's bearish, sell. You have to understand the scenario in the market. So that means you have to understand, you have to have that framework in place to read the market in order to understand. The market will teach you within that framework what's bullish, what's bearish, because you will observe what happens most of the time in those scenarios and you'll have a good idea of what the odds are. So let's move on now to, you've learned how to read the market. Now what do you do? How do you take that knowledge and define your edge? So the first question is, what is an edge? So if you know what an edge is, you can type it into the chat area. Basically, an edge is an advantage you have over others. Yeah. So what's exactly a technical edge in the market? That's recognizing when the odds in the market are in your favor, based on the charts primarily. Yeah. Ask yourself the question, who is on the other side of your trade? If you don't know who is on the other side of your trade, then you're probably the novice trader on the other side of a pro. So you want to know when you're buying, someone is on the wrong side of the trade and they're selling to you. Yeah, maybe after a move down in price to an area of demand in the market, when the trend changes and price direction now turns to the upside, you buy, someone just sold to you, they're making a mistake most often than not. So the question is this: do you know what your edge is? Now here's a very, very important question to ask yourself, because there's many people that start trading and they maybe learn a strategy, but they don't understand what their edge is. And guess what? That strategy may not work in all market conditions, and it may work, in a bullish market, for example, but if the market starts chopping sideways, that strategy is not going to work anymore, or it's not going to give the same returns, or even worse, it's going to cause consistent losses. So if you're coming to the market from a strategy-based perspective, then you're very limited. If you're coming to the market from let's read the market, from a market-based perspective, then you can adjust to different market conditions and apply different strategies, which is a way of encapsulating the edge in the market so that you can take advantage of it. That's what a strategy is. A strategy is a way of understanding when the odds are in your favor, and it will tell you how to get in, how to get out, how to manage how to manage the trade and everything else. What does that scenario look like, and how do I write a strategy for it? So that's what you need to recognize, and it's basically coming from the market. If you're going strategy based, you're going to be limited. You won't understand how to apply it or when the market changes. So here's a very important question you have to ask yourself. Do you know what your edge is? And if you don't, this is very important. If you cannot clearly explain what your edge is, you do not have one. And this is a very hard thing for most of you to hear. If you do not have an edge, do not trade. You're setting yourself up for failure. If you go to the market trying to make money by following something that you don't understand, you've got no idea why it should work, then you don't have an edge and you shouldn't be trading. You want to come to the market from a standpoint of strength, understanding exactly why you're doing what you're doing and why it should work. Now we're going to go into the details of it very shortly. So now you know what your edge is. Great, you're buying in an uptrend, for example. So you have to identify what a trend is and identify where the best place to buy in a trend is and how to get yourself into the trade and where you're going to get out of the trade and where you're going to get out if it goes against you and how to manage your risk. You've done all that. You know how to do that. But so have you proven your edge? Great, you've got an edge. Let's go and trade it now and see what it does. So let's try trading it. And the next question you need to ask yourself is, does your edge have a positive expectancy? And I'm going to show you some examples of what that means. That means over a large enough number of trades, you'll make money. For example, you can have a system that can be wrong 99% of the time, but the one time it's right, it makes $1,000, for example, and the 99 times it's wrong, it loses $1. So you're going to make a lot of money doing that system, but you'll be wrong 99% of the time. So that has a positive expectancy, but you have to be able to sit through 99 losing trades in order to get the one winner. So the question is this: next, after you've proven your edge, so you've got a good edge, someone else may be trading it, and you've proven that that system works and that that strategy works. The question is, can you successfully trade your edge? Can you actually do it? Many people can walk the tightrope between one mountain and the next, but can you do it? That's the question. Okay, have I disappeared? Mike, am I still around? Looks like I'm disappeared. Let me... Okay, I think we're okay. Does everyone else still see the screen? You can still hear me? I'm assuming everything's okay still. So you have to prove your edge has a positive expectancy before you start trading it with real money. That would be recommended to do. And you have to prove that you can actually pull it off in real time, in the real market. Just because something works for someone else doesn't mean that it could work for you. It might not fit your personality. So how do you go about establishing a profitable strategy? So these are the steps that you need to go through. You need to look at what the risk is on the trade you're taking. What does it look like? As in, you need to know where you're entering and where you're getting out if it doesn't work. Now, most people think that a stop is there to stop you losing money, correct? That's not correct. A stop is there to get you out of a trade where the original trading idea is no longer valid. So if you get out of the trade, for example, in the wrong location, and the trading strategy or the trade is still valid, you'll get stopped out, and then the market will turn in again, in your original direction and go to your target, and you're not in the trade. How many times has that happened to you? So you have a stop there, and what did you stop do? It caused you to lose money, the exact opposite of what it should have done. If you put it in the right place, it would stop you losing money over the long term. So you need to know what you're risking on the trade in terms of the chart, and also in terms of risk management, position sizing. You need to know how much you're risking in terms of dollars. You also need to know what the potential reward is. Now, once you know that risk to reward on the trade, you need to know how many times your trade is working over a large number of trades. For example, if you find out that your strategy only works 50% of the time, then you'll know that half your trades will be losers. So what you need to do is look at your average win to average loss. And the other thing that you need to know is your batting average. So if someone turns around to you and says, hey, I've got a strategy that works, and you're going to be right 99% of the time, I'm saying like, oh, that sounds good, doesn't it? But guess what? You could still lose money on the over the long term if every 100 trade you lose much more than you made on the 99 winners, for example, then you would have what we call a negative expectancy. So once you've got these numbers, you can actually calculate whether you have a positive expectancy or not. And this is the formula. It's very simple. You want to look at your average winner, multiply it by your win rate, as in your batting average. Take away from that the average loser multiplied by the loss rate. If that number is positive, you have a positive expectancy. I'm going to show you some examples, so don't worry if it's a very simple formula. It's just a plus. It's minus and multiplication. Very simple. And you'll know what your average winner is because you can look at how much you made across all your winners, divide it by the number of trades. And the win rate is how many of those trades out of, say you did 100 trades and 50 were winners, that's 50%. Yeah. So your loss rate is also 50%. But if your win rate is 60%, your loss rate will be 40%. Very simple. And the other thing that you need to do is to develop a strategy that fits your personality and lifestyle. Very important. It needs to be tailor-made to fit you. So therefore, if you're going out into the world of trading and you're searching for a strategy, you may be doing it the wrong way around. What you should be doing, in my opinion, is understanding how to read the market first and then developing your own strategy that fits your personality and lifestyle. That way you're in control. You don't have to rely on anyone else or any guru out there. It needs to be something that you've built yourself. And most of my successful traders have gone about building their own strategies within the framework that gives them a positive expectancy and gives them an edge. So let me show you examples of some profitable trading strategies here. So remember the formula: average winner multiplied by the win rate. Take off that the average loser multiplied by the loss rate gives you a number. So for example, your batting average is 50%. And your win-loss size ratio, that means your average winner is double your average loser. So if you were to risk $100 per trade, so if you run through the formula over here, $200 on a win, that's 200. You're risking $100, so you make 200 on a win, you lose 100 on your loss, you end up with an expectancy of $50. That means the more trades you make, the more money you will make. It doesn't mean that you won't have a number of losers in a row. You could start off with 3 losing trades in a row. It's not going to be winner, loser, winner, loser. It could be winner, 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 and then 10 losers in a row, and then 5 winners, a loser, winner, loser. You don't know how it's going to turn out. So you have to think in probabilities. But if you have a system that does that, the more you trade it, the more money you're going to make. Every time you take the trade with $100 risk, you're going to make on average $50 a trade. Even in the losing trades, because on average across all the trades you take, that's what expectancy means. Okay, everyone following? So let's take an even more extreme example. Your batting average is now 25%. That means 1 out of 4 trades are winners. You're wrong 75% of the time. Who wants to be wrong 75% of the time? Guess what? Trading's not about being right or wrong. It's about making money. You can be wrong the majority of the time and still make money, and this is how. If your average winner is 4 times your average loser, that means if you risk $100 per trade, you will make $400 on average on a winning trade only 25% of the time, and you'll lose $100 on 75% of your trades. That means your expectancy is $25. That means you're still making money over time. So those are the 2 really important numbers that you need to look at on a strategy. There are other numbers, but these are the basics that you need to get down. You need to make sure these numbers, the expectancy is positive. Otherwise, you will never make money trading that strategy in the long term. You may have periods where you will make money, but there might be periods where you don't if you don't have positive expectancy. If you do have a positive expectancy and you can trade this system, then over time you will make money statistically. And that should give you confidence when you're trading to take the losing trades, because you know now that you're going to be wrong 75% of the time. If you can't stomach that and it's not for you, then guess what? A strategy that only produces 1 out of 4 winners is not a strategy for you. You might want to go for maybe 50% or maybe even 75%, or if you don't like being wrong. So again, it depends on what fits you. So let's go through the steps you need to go through to build a strategy. Firstly, you need to define your edge, whatever that is. And as we said earlier, if you cannot define your edge, you're not even beginning to become a trader. You're nowhere near. You're not even in the right on the right road. You're not on the right journey. You haven't even started the journey. You need to define your edge. First things first. Once you've got an edge, and my edge is understanding supply and demand, as I said before, price direction, which direction price is going in, and how to read the trend on multiple time frames. And I'm going to go share with you how you can actually get on board with that very shortly. Once you've got an edge, what do you do with that? You need to define a strategy. Yeah. And what we suggest to the people in our trading room is observe the market within that framework of understanding how to read the market and what jumps out at you. Whatever you see happening on a time and time again, start developing a strategy. Define that strategy. You need to have entry rules, exit rules, trade management rules, and risk management rules. Also money management rules on a bigger, that's kind of outside the strategy. That's more on a trading plan level. It's above strategy. You may have money management rules per strategy as well. Once you've defined your strategy, what do you do next? You've got your edge. You've defined your strategy according to your edge. Now what do you need to do? The next thing in the process is you need to actually test the strategy. So you trade the strategy, you test it using maybe simulation software, or maybe you test it in the live market with a very small risk size. You could risk, I always start my traders risking $10 per trade, that's it. And you can do that trading the Forex market. You can actually, when I first started trading the markets, we couldn't trade anything less than standard lots. So now it's much easier. You can trade in micro lots, And what you need to do is track your results. Once you've got your results over a certain number of trades, maybe 20, 30, 40, 50 trades, you'll see, is this strategy got a positive expectancy or not? Is it working for me? How many of those trades are winners or how many are not? Am I executing my strategy correctly? Again, if you don't follow the strategy, you've got no idea if it's working or not. There's many people out there that have a trading plan, but they don't follow it. So if you can't follow it, that's called discipline. That's what Norman's going to touch on. How do you get yourself to follow your own strategy? Discipline is the ability to follow a set of rules. So you must have a set of rules to follow. If you don't have a set of rules, you cannot be disciplined. So you track your results, and then what you do is you go back and you adjust the strategy. Maybe you need to make a few adjustments here and there. You're developing it at the moment. And then you need to ask yourself the question, do I have a positive expectancy? If I do, I'm onto something here. I understand what my edge is. I've defined the strategy. I've tested it. I've got results now. I've adjusted it until I can do it. I've got a positive expectancy. That's the starting point. And then what you need to do is finally trade the strategy. So those are the steps that you need to go through in order to build a profitable trading strategy. Remember, you're starting from your edge. If you do not have an edge, you cannot define a trading strategy. It's impossible. You need to know what your edge is, whether it's supply and demand. If you're indicator based, for example, then you have to understand why that indicator is your edge. Because a green light goes on means buy and a red light goes on and someone else developed it, do you understand why it should work? If you define or base your trading on someone else's edge and you don't understand how it's built, how could you trade it confidently? It's very difficult to do that. And ask yourself, for those of you, and I have many people that go through my training that have gone through others, and they don't understand exactly why the strategy should work and what's going inside. It's like a black box to them. So it's very hard to pull it off if you don't feel confidence. You never built it from the ground up. So let me take you through the next stage here. Now that you understand how to build a profitable trading strategy, the steps that you need to go through, it's very simple, but you need to follow these steps and you can't leave anything out. So take the first step and learn how to read the trend using pivot analysis. Remember, you need to have an edge. This is the first step that most traders need to learn, is how to define the trend. If you don't know how to read the trend, you've got problems. So what are the benefits of knowing how to read the trend? Trade in the direction of the trend. The trend is your friend. Remember, most people miss the end of that off until the bend in the end, and that's usually in areas of supply and demand. When does the trend come to an end? Well, you can know quite accurately once you have that framework. So you'll know exactly when the trend begins. It's not, it's exact. You'll know exactly when the trend ends and make sure you're never fighting the trend. I try most of the time when I'm entering a trade on the time frame I'm entering on and make sure I'm not fighting the trend. If I'm in a downtrend, I'll wait for the trend to break and then I'll enter on the long side. Make sure you're on the right side of the market. You'll be able to develop your own profitable trading strategy just from this alone. Or enhance an existing trading strategy, make it better, maybe filter out some of the trades that are not working because you're getting in against the trend, for example. So you can join my How to Read the Trend training session, and this is what you'll learn: how to identify the current trend of the market, to analyze a trend in multiple time frames, exactly when a trend begins and exactly when a trend ends, and how this knowledge will dramatically affect your bottom line. And I'm going to share with you how it actually has affected the bottom line of various people. So let me share with you this, what people are saying. Jane, I don't know how to begin to say thank you to Simon for having made such a big change in my life. In short, I had been trading binary options successfully when it was banned last December. So wanted to learn to trade properly. I contacted Simon after watching his Where is the Dollar Going Next videos. I must add that they were so accurate, I knew that finally I'd found someone who really knew what he was talking about. We chatted on Skype a few times and I decided to join the trading room for a trial. Due to having a full-time job, I couldn't really join during the week, but a few times I did, it was incredible. I just watched what Simon did, how he used the levels to place his trades. This was something completely new to me. After having only traded binary previously, I was amazed at what I saw. Simon contacted me again after the trial was over, and after another few Skype calls, I did his pivot analysis training. All I can say to anyone who wants to consistently profit, just do it. That training turned my whole trading around. From that day on, my trading has been so consistent, it is really mind-blowing. Once you understand the levels and can read the trend, you will beat the market every single day. However, the key is follow the pivot analysis, use the supply-demand levels and adapt it to your own trading style. Be very disciplined, don't be greedy. Stop when you have made your daily profit and you will turn losing trades into winning consistently day in and out. Simon's training can be adapted to any market. I mainly trade Nasdaq and oil futures. I use my own strategy based on Simon's education. I found the best thing was knowing what you are doing gives you confidence in your trades and the fear of losing was gone. Trading had become a lifestyle, no longer a binary gamble or nervous hope job. Believe me, it is the best and the only training to succeed with. Marcus, Simon is probably one of the best coaches out there with a heartfelt passion for coaching and a real understanding of how the market works. He helps you view everything in a new way. The way he teaches is also really good and he goes through it until you understand. I can honestly say I've gotten more out of this training than I expected. And here's a new one. Francesco, who's just joined our trading room and just gone through the training recently. When I first watched How to Read the Trend module, I must admit that I did not appreciate the power of pivots and their interrelationship with supply and demand. Honestly, I thought it was more of a good education module for beginners, talking about what a candle is. And that, of course, I was smart enough to be able to read the trend already. Now, after having been a few days in the live trading room and seeing some pretty uncanny results from the past at least, my first week did not have much action per se. Something clicked. So I decided to rewatch the first education module. Now I can see that it is really a lot more powerful than it first appeared to be to me. And it is quite deep. Sometimes we don't see what is right in front of our noses, as the old saying goes. I would say now that I know things about reading the trend that I did not have a clue about before doing your first module. So the first thing I'm thinking is why I didn't do this 25 years ago when I started. So this is what you get in the training. It's over an hour and a half of training, $397. On demand, you can watch it as many times as you want, and you can see the more times you watch it sometimes, the more you will understand. And you get personal access to me, and I'm going to show you how you can get personal access to me every single day, and not just by email, at least for a certain period of time. Now, this is what the offer is. If you join today, the regular price is $397. The deadline's Thursday, November the 7th at midnight. And you're going to receive $200 off. So you need to use a coupon code 200 off. Let me show you quickly what you need to do, and I'll just pop in the offer as well so you can follow through with me. And what I'm doing also, there's going to be, I think, 10 units available, and let's go, because I want to limit the number of people in the trading room at the moment, because everyone's kind of, so I can focus on people. So let me publish it. So you should see it popping up on the right. Maybe Mike can put the link in as well. And if this is for you, let me show you what you need to do, and you can kind of hit the buy now and it'll take you to the checkout. So let me show you. So you can go to my website, it brings you to this page. Yeah, and this is the actual offer. You click on buy now and it will bring you to the checkout. What you need to do is take the coupon code over here and type in 200 off. And I'm going to show you something else that you get here. You click over here and it will take $200 off, and you pay basically $197. The monthly is for the after, in a month's time. What it does is it's a monthly subscription for the trading, which is usually $497 a month, but everyone here can get the offer of $200 off going forward. You can cancel at any time, so you can be charged $197 a day and then cancel the recurring payments if you want. It's up to you. But if you see value in it, it's worth continuing. And so let me share with you what it looks like on the inside as well. So you go through all that, you fill out your details, and you'll be sent an email with your login credentials. Then what you can do is you get to this portal, so you can get there through the members on the front page over here. You click members there, or you can go for home members, and it will bring you up to this page. And how to read the trend is in here, and the trading room is in here. So if you click on access now, once you've put in your login credentials, you come here, and the first training is how to read the trend. You'll have access to that, and you can get it also from here. You can click on either, and you get immediate access to this training over here, which was recorded from a live training I did a number of years ago. And you can click on here and watch it. I think it's about an hour and 40 minutes. The trading room, and you go through here, and what you need to do is click on live trading room, and you register, and you see what the schedule is. You register once here, and you'll get an email sent to you 15 minutes before we start live as well. And then once you've registered once at the right time, you just click here and you come straight into the trading room. The daily sessions are recorded, and we also have weekly preparation sessions which are recorded as well if you can't make it live. We keep the one that happened most recently and the one from the previous week as well. So this is the one, and this is where we set up and prepare, and there's people in this this is a subscription as well, but you're getting it all as part of the live trading room. So let me show you what the offer is. So I've already kind of sport the bonus. Let's go back. So the bonus is 1 month free in the live trading room. It's usually $497, okay? And what you need to do, let me show you. So if you join now, you get how to read the trend, which is $397. 1 month in the live trading room, which is $497. So the total was $894, and today you only pay $197. That's it. So you've seen how you can get in. And again, this is stage one of learning how to read the market professionally and having an edge in the market. And again, it's very, very powerful. And I'm going to pass over to Norman, who's going to take over the screen, and he's going to take you through the discipline side. Once you've got your trading strategy in place and you know how to, you've got your edge, how do you get yourself to follow that, to follow the rules that you've decided that you've got for yourself? Many of you may find that you've got your trading plan, but you don't seem to be able to get yourself to follow the rules on a day-to-day basis, and it's very frustrating. So Norma's going to address that now, how to get yourself to follow those rules to be disciplined. So I'm going to pass over to Norma. I'm going to mute myself, and then we'll come back at the end for questions and answers.
Okie dokie. Stick with me on the audio there. I just want to make sure, Simon, that you're seeing the 5 master keys. Are you seeing that okay?
Yeah, perfect.
Okay, great. I want to thank everybody for being here, and of course Simon for having the idea of putting the yin and yang of trading together, which essentially is is really the having the system, the process, and having the mental and emotional capacity to make it happen. Simon, you know, I work with a lot of different traders because there are not a whole lot of yang people around, not a whole lot of people that focus exclusively really on the mental and emotional areas of trading. And I've been doing it with my wife and our subconscious trainer now for 15 years. We're probably I may be wrong about this, but I think we're probably the biggest and probably the best known around for this particular area, because really it's not a glorious area. We're asking traders to look at themselves in the mirror and get honest with why they've got a decent system and they're still not producing the results that they want. I do want to, before I get into my presentation, I'll do that in 60 seconds. I wanted to say that, yes, I do work with a lot of traders because I'm a great complement for, I mean, what good is a great trading system if you can't follow it? But I wanted to specifically address Simon, who, and I get feedback every time these partnerships are finished in these episodes that I do. But Simon is probably the number one guy when it comes to, I get it, when the communicator. People understand what Simon is getting at, and how to become, how to have a system and that positive expectancy, which I love, that whole thing, because that's if you have a Venn diagram, it's the positive expectancy that intersects between, you know, believing in your trading system and having the strength to apply the trading system. So I wanted to just let people know that if there was one thing about Simon, you hear a lot of people, and if you're looking around for a little bit of training, Simon's the guy that can communicate. He's a successful trader himself, which I think if you ask, if you pin people down, all of these great traders, a lot of them don't even trade. And I won't name names, but some of them will floor you. And Simon he's just a great communicator. Anyway, enough about you, Simon. Let's talk about me, the disciplined trader. And let's really talk about everybody out there, because this is what it's about. I want to go through quickly the 5 master keys, and then I want to give you kind of a special at the end, which I've never offered before, and this is the first time I'll be offering it. Let's talk about why traders resist training for their trading discipline, and there's some easy to understand reasons. One is, you've got to, as I mentioned, you got to look in the mirror. And since about 85% now, maybe 83% now of traders are men still, and it's crazy because women, I think, are much better at the discipline part of the game. And trading, you got to look at yourself, and the ego gets involved when you do that. So it's tough to take that first step and say, hey, I'm going to cross over and say, hey, maybe it's not my system, maybe it's not the traders on the floor, maybe it's not the big money that's moving around, maybe it's me, maybe it's the way I'm approaching it, maybe I don't have the kind of positive expectancy, and I haven't done the work that Simon mentioned. You got to take responsibility, and I think there's a lot of people that, although they say they want to take responsibility, they much rather continue to press on with their struggle, waiting for that day when it turns positive, and then they can tell the story of all that struggle, all the struggle I went through, and then it finally worked because I stuck to my guns. Well, sticking to your guns with a losing attitude and a losing process is not going to get you where you want to go. You got to take responsibility and commit to make changes. And it's easy to blame the market. And essentially, a lot of people are just too lazy to put in the work, which is why we, in our general training at thedisciplinedtrader.com, our general training is a monthly $49 affair. So it's certainly, the money doesn't get in the way. And it's 7 minutes a day to train your mind with the meditative type of trainings that we have that are right on the screen in front of you before you start trading. So You can't use that excuse either. And of course, finding the Holy Grail is the most important thing to losing traders. Let's just keep looking because it's out there. I just haven't found it. I'm not looking hard enough. Truth is, there are, and every time I say this, I get emails, and I'm sure I'll get it here. What are some of those? I say I probably see 50 or 60 really good trading plans and systems that'll work very well if you just commit to them and follow them. So please don't send me any emails. Ask me what they are, because you were just presented one in Simon's plan. Okay, let's go through the 5 master keys quickly. And this one will be almost the quickest, because really you need a sound trading plan structure. And Simon really went through all of that for you. What is your trading philosophy? What do you believe in? In fact, Simon mentioned candles and so on. I like candles because they measure the emotion in the market better than any other indicator. I mean, you can look at momentum and so on, but emotion in a particular time period is measured by a particular candle, where it closed, where it opens, which are the most important parts. So the trading philosophy, what do you believe in? And it's specific to the person. As Simon was saying, I can show you a number of different trading techniques and so on, but unless it fits you, then it's not going to work for you. Trading psychology, of course, it should be part of your trading plan. In fact, even if you have nothing in your trading plan right and your journal right now that you should be running at least 3 or 4 minutes a day to write this statement: I'm a wise and disciplined trader, and I do the things that a wise and disciplined trader does. If you open your journal and put that in writing at the beginning of your trading session, at the end of your trading session, I think you're going to wind up seeing that you're going to have better results just by putting it in the front burner of your mind that you're a wise, not you're a smart guy or a smart gal, but you're a wise and disciplined trader. Wisdom will trump smarts anytime. Okay, and as far as trading philosophy, you've got to have a section in your trading system, your time frame. You've got to decide whether you're a long-term trader, swing trader. Again, Simon mentioned most of these things: risk evaluation, analysis, and so on. Of course, you have to have a clear entrance and exit strategy. And the elements of a trading system, I'll just keep pressing the button here. Define your entry signal, define your stop level and position sizing, determine your exit signal, and define your uncle point. Uncle point meaning that there's a point in every trade where you've got to say, hey, you got to walk away and say, I've had it. Especially when you start trading larger money and you have bigger positions, you start thinking that you can defend and take. You still have to define your risk, and it shouldn't be anything more than 1 or 2%, 3% max for the more aggressive lifestyle people. But you've got to define your uncle point. Okay, here's Master Key 2. Let's put the trading plan aside. I think I won't be able to do as good a job as Simon, so I won't even attempt. Master Key 2, proper risk and money management. And I look at it as 3 different levels. And Simon mentioned the fact that trading is a business, and I'm sure I'll have that statement on one of these slides. The business level, the trading level, the yellow level that you see, this trading level is the level that you're trading right now. You have a position on, it has an entrance point. Now you have a position on, you've entered the trade, you have your stop in, you've got your expected exit strategy, either a trailing stop or a particular target with a price on it. So you've got to manage your risk and money management, proper risk and money management in that trade level. Then there's the portfolio level. I trade commodities mostly, and there's no, there are many times during the day, most days, where I'll have maybe I'll be long the soybeans and short the Japanese yen. That's the portfolio going on. So you must have a focus not only on a specific trade, but the multiple trades that you may have on long and short term, so that you make sure that you stay within that 1%, 2%, 3% parameter for a particular trade. In fact, in the portfolio level, my number is still 3%. In other words, if I have a trade on that has a 3% possible risk, I can't put on another trade. But if I have a trade that has a 1% risk, I can put on another trade with a potential 2% risk on it and still fall within my 3%. So wanted to give you that concept, as well as the business level. I have a retirement account, I have a trading account, and so on, and I'm looking at how every time I take an action, especially at the end of the day, or when I plan for where I'm going in the beginning of the day with my trading, I look at as a whole, the risk and the money management as far as what am I looking at in my entire portfolio. If I'm long everything in a portfolio, I can see that from a business level, because again, I'm looking at my trading and my life and my money as a business. Where my trading losses are the cost of doing business, like somebody, the cost of a product that somebody would put on the shelf and try to resell. That's my cost of doing business. That taking a loss, and of course a profit would be when I make a gain. And of course you want to end your trading experience with having profit. And this slide gives you kind of a, and this is not normally what you would think, kind of counterintuitive, that really the entry, I find, can be the least important aspect of your trading from the standpoint of where you're placing your attention on risk and money management. Because there's a lot of times somebody will show me a trade and I'll suggest how they may want to save the trade or limit the loss or border the trade or whatever. There's a lot of things to do once you're in the trade. But before you enter the trade, you need to understand your process of position sizing, which may very well, maybe should have been the biggest part of this, but I still do think that exiting the trade is where traders tend to vary their thinking and their original plan, because things look so good. They get very close to their target very quickly and they say, well, maybe this thing's going even much further, instead of taking the right attitude and saying, let me follow my trading plan. If I get out early, it just means I can jump on another trade. And as Simon said, if you've got a good trading plan, you can take your trades. It's a matter of taking as many trades as you can, then you'll make the most money that you can. So position sizing is very important as far as how you position size. Many of the trading plans that I run have two positions going in to start, and then when you get a positive aspect early in the trade, I always take a quick profit on one of those. That helps me build my mental and emotional capacity, keeps me with that positive expectation, keeps me thinking positively, and keeps me on the right track. But again, I just want to give you a perspective on, if you're spending your time, where do I get in, where do I get in? I think you got to reconsider how you're position sizing and you're exiting, and spend a little bit more time and net much more time in the end in those areas. Okay, master key number 3, reversing poor mental trading habits. And this, of course, is the area where my firm shines, not because we were born doing it, but because of the hard work and having worked with thousands of traders getting their heads together. I mean, most traders know they can do this. You can do this, but they cannot control the mistakes that they made for all the reasons we've gone through, and many more that I haven't. You've got the root of trading habits, good and bad. And this is an important statement. What the subconscious mind holds as true, dictates how your conscious mind will make decisions. In other words, what your subconscious mind holds as true is true for you. This is what you believe. This is what you'll believe. So the master key is train your subconscious mind with thoughts and beliefs supportive to the disciplined trader. And that's really what we do here. Now, let me just give you just a little bit of science. This is not hearsay. It's not, some phantom talk. It's not somebody's idea that's unproven. This is proven stuff about how the mind creates neural nets through the addition of multiple neural pathways. A neural pathway is a series of electrons. It's a magnetic charge, an electric charge that goes when you have a thought, when you say to yourself, when you take 5 losses in a row and you say, I wonder if my trading plan is going to work anymore. I've taken 4 or 5 losses in a row. That thought becomes a neural pathway and enters your mind. When you have that thought again in a different form, let's say, or the same form over and over again, well, should I take it? I don't know if I should take it. That doubt is another neural pathway. And those doubtful neural pathways, when you get enough of them, and it doesn't take much if it's a repetitive thought or if you're having it during a highly emotional state, when you have enough neural pathways with the same kind of message, it forms a neural net. And that neural net is what we're talking here about, is the specific part of the subconscious mind that you're holding true for you, and it dictates your actions. Meaning that if you had this scenario happen to you that I described, where you have 4 or 5 losers in a row, and you're starting to doubt your system, then and you've created so many neural pathways that you've created a neural net around that, and you've done this for a couple of days, and that neural net is strong. When you have a beautiful trade that comes up and sets up, you'll hesitate to take that trade because the stimulus, which is let's take the trade. The stimulus is your trading plan. The trading plan telling you to take the trade. Take the trade, but then you hesitate because your conscious mind which is what's operating everything. The mind that you think that you're talking to every day. That's your conscious mind, what we perceive. That is taking direction from your subconscious mind, saying to you, hey, wait a second, you just lost 4 trades in a row. Were you sure about this? And as you hesitate and that market continues higher, in a case of a long trade, and you decide to not take the trade because you don't want to chase the market, which is probably a good idea, you may come back and say to yourself, gosh, I got to train my mind so that I don't miss trades like this. Or you can come back and say, hey, missed another trade, maybe this whole thing is not for me. You have to control your thoughts. And the way you control your thoughts is by submitting thoughts through neural pathways to create neural nets that support you as a trader. I hope you understand what I've just said about that, and I'll take questions on that later if you can. But that's the prime objective here. Continue to think positive thoughts that are constructive for you as a trader. Repeat those thoughts so that you form a neural pathway, so that when the discipline, when the trigger comes, when the stimulus comes, your response will be directed by your new neural net, which is, I'm a wise and disciplined trader, and I do the things that a wise and disciplined trader does. I follow my trading plan, and I take trades as soon as my trading plan gives me the signal. That's the kind of neural pathway that you want to send you want to put in your head so that and repeat yourself. So you see how excited I get, because I see how well this works when you just take your 7 minutes a day. Okay. Strength to pull the trigger. Here, and I'm going to go through these very rapidly. Strength to pull the trigger. These are the 7 subconscious characteristics. Strength to pull the trigger. This is one that I covered in my example. It's about taking action. It's about acting on your conviction. Can you be believed to yourself? Am I, and I said that in my last sentence, is this whole thing for me? I mean, when you get to that point, should I really be doing this? You've got to see me. I mean, you should see me way before that, but the sad part is that most people come to me when they're already driven into the ground. Number 2, out of these 8 or 9 that I have listed here, overcoming thoughts of fear and greed. The fear part would be overcoming fear of losing again, proper perspective on winning and losing, which Simon gave you a pretty good perspective there. It's easy to say it's okay to lose 4 trades if the 5th one is going to be a great one and run that system, but as Simon also tailed it in a softer voice. He said that if you're the kind of person that doesn't like to lose a lot of trades, again, you got to know yourself. Then that trading system, even though it will work, is not for you, because you're going to be fighting it with thoughts that are native to you, that would be tougher to overcome. Okay, so it's better to get a good fit and then work with your strengths. Okay, avoid feeling bulletproof. And that's what happens when you get 3 winners in a row. You start thinking, okay, that position sizing, this is time to go 3 positions instead of 2. So without really much of a plan. And if you don't have that edge that Simon talked about, you got nothing. So avoid feeling bulletproof. Keep the targets. Keep the targets in your orders in. Okay, if that's the plan that you had when you put on the trade, follow it in the end. Okay, characteristic number 3: trade to make money. Simon said it at the top of this whole thing. This is a business. You keep this in the forefront. You're here to make money. You're making the right moves. Trading is not for ego. It's not for proving to others. It's for making money. Okay, number 4. Visualize success as a trader. And this is really where I think I think traders see this as something that's like there's a show called Seatbelt Psychic that I get a grin out of. It's a guy that's in a car, and he has people in the back seat. He drives Uber, and he asks them, do you want me to read? I'm a psychic. Do you want me to read you while you're in my car? I mean, I'm not talking about psychic, whether you're phenomena, whether you believe in that or not. Visualizing, putting in your mind, visualizing where you believe you want to be, where you want to be, and the clearer and more distinct that is, the more you will make decisions to get to that place. It's just, and that is science, okay? Visualization is real, and you need to do it as a trader. It makes life a whole lot easier, okay? You see yourself as a trader. You're not trying to be a trader. You're not learning to be a trader. You are a successful trader. I'm trying to be, I'm learning, no good. Because that puts you in the before. You're visualizing yourself. There's no such thing as being half pregnant. You're either a successful trader in your mind, you're a wise and disciplined trader, and you do the things that a wise and disciplined trader does, or you're not. Okay, so there's no middle ground. You've got to keep, and when you have a thought that's middle ground or negative, you catch that thought and you say to yourself, hey, that was me before, but now I'm a wise and disciplined trader, and I do the things that a wise and disciplined trader does. Okay, we move in the direction of our most predominant thoughts. So the more we can visualize ourselves as a trader, and this is a lot of that 7-minute that you like you to do, that meditational thing. It's a lot of that is seeing yourself having a positive day, a professional day, a day where you follow your plan, and a day full of positive expectancy. Okay. Subconscious characteristic number 5, the action plan. This is the action part of letting losses execute. Okay. You got to let your losses execute. They're part of the whole. Every loser brings you closer to winning. Losses are part of the winning process. Strength to take your losses avoids the devastating huge loss. Okay. What you don't want to do is marry a position. Okay. And I don't have to go into much of that. I think you all know that. You need to sustain your focus. I see it a lot, and I talk about when I'm live with people in groups and the expos. I always talk about the fact that you need to sustain, that this is a marathon and not a sprint. Trading is something that you've got to develop your legs over time, and it just gets better and better. Multitasking is overrated. Focus is underrated. I like to trade for 90 minutes, and if I'm not in a position, I like to leave for 30 minutes. I make my own lunch. I love to cook, so I'll make my Beyond Burger. And if you haven't tried a Beyond Burger, if I gave you one right now, it's a vegetable burger. It's actually made of pea protein. If you haven't tried it, and I gave it to you right now, and I put lettuce on a brioche bun, and I put some mustard on it with some sauerkraut, you would not know it's not meat. It's amazing. Beyond Burger. So if you take nothing from this get together, go get a Beyond Burger. Okay, characteristic number 7, exercise patience. This is the one characteristic that is the turnaround. It's the point that I hear most about from people that we work with, whether it's private coaching or whether it's on the Disciplined Trader do-it-yourself stuff, following our videos and so on. Patience to wait for the A trade, to wait for the setup, to not anticipate something. I was talking to Simon before we got on, and I was talking about a particular trade that I was watching, and he has a particularly opposite direction read that I do on this. I'm taking a little bit longer term view on it, but our perspectives are different. And I said to him, you're right, Simon, but I'm waiting for the close, because my process and my system needs to wait for the close to make my move. So you have to be patient and not anticipate. And you must have the patience to only take A trades, your best setups, where you have, Simon talked about an edge, where your edge is the strongest. This is where your major gains are going to come from. Okay. Characteristic 8, sustaining discipline. Again, it's a marathon and not a sprint. You have to make the training of discipline a routine, because I'm sure if I hit that chat box right now, if you hit it right now and I ask you, do you take at least 5 or 10 minutes a day and devote it only to the mental and emotional issues for trading? you know, I'm sure if you're honest, I'm going to get a lot of no's, and that's okay. Because now you know again, and you know it from me, a guy who's been helping traders turn their trading laws around, not through having a different trading system, but being able to follow it with ice in the veins consistency. You need to make it part of every day. And the last is the last characteristic is you got to manage your stress. You've got to exercise daily. I was talking to, again, Simon and I are exercise guys. I like to exercise. I still lift the weights at my age, and I play tennis. Play not competitive, but I guess I'm a 3.5, 4.0. I am in a league tonight, so I like to play. I like to get out there. You need to release the tension. You need to take breaks. You need to adapt some kind of a relaxation methodology. And if the best advice I have for you is marry a subconscious trainer like I did, and you won't get away with anything. You'll take your breaks. You'll get relaxed, and you'll have a beautiful life like I have. Okay, so here's Master Key 3. Reversing mental trading habits. These were all of the things that I mentioned to you. Strength all the way through exercising, patience, and stress management. Okay, key 4, effective self-analysis and response. Again, you're journaling, and I just want to give you, rather than talk about, shove it down your throat about how important journaling is, I will just give you, if you're not journaling, I want to give you just one way to do it. And this will take you 2 minutes before you start your trading day. So you'll do your 7-minute mental training, so get your mind straight. Then you'll do 2 or 3 minutes of journaling. Then you'll trade, and at the end of the day, you'll do another 2 or 3 minutes of journaling. And here's how you'll journal. You can get your monthly statements, your daily statements, and see how you're doing with the losses and the gains. And if you're a spreadsheet kind of guy, more power to you. I have a report. It comes in our course. Anybody who works with me, I'll give you the report, 99 different ways to journal. I asked my people one day, can you give me, how do you journal? I know, and I couldn't believe all the different ways. There are some really neurotics that write down everything. And that's cool because that's who they are. That's how they gain their strength. That's how they get their positive expectancy. And so self-evaluation and critique. You need to self-evaluate. Okay, at the end of the day, let's start with the end of the day because it gives you what you're going to do in the beginning of the day. Let me explain. At the end of your trading day, you say to yourself, what did I do right? And then you ask, where did I follow my plan? So what did I do right? You start with something positive. Okay, today I kept my stops. Today I hit my target on a trade where I was having doubts, but I kept it in. I had my strength and conviction, and I made a nice profit. Okay, where didn't I follow my plan? Well, I got a little scared. The market was moving down. I thought they'd take me out, and I moved my stop down, and of course, I took a bigger loss than I had planned. What caused me not to follow my plan? I just kind of mentioned that to you because I was a little bit scared. And what will I commit to tomorrow to make me disciplined in that same situation? So, okay, here's the entire journal entry for you, okay? I always start with, I'm a wise and disciplined trader, and I do the things that a wise and disciplined trader does. Today, I stupendously, and I like to have a little humor in my, I'm giving it to you just like I would write it. Today I had today I hit my target perfectly, even though I had some doubts were in my mind. I held my conviction and I took my profit nicely. But I did something that was unnorman-like. I did something that I was beside myself. I never put myself directly into the wrong, even though I'm admitting it. It's something that I've learned to do that makes the whole process easier. I did something un-Norman-like. Don't use the name Norman unless your name is Norman. Use your own thing. Where didn't I follow my place? So you say to yourself, so you start with, I'm a wise and disciplined trader. I do the things that a wise and disciplined trader does. I kept my target in and took a really nice profit, even though I hesitated just for a second. Today I did something that was un-Norman, like I moved my stop because the market scared me and when it was dropping too quickly. And then tomorrow I will be the stop king. I will put my stops in according to my plan and I will not waver. I am a wise and disciplined trader and I do the things that a wise and disciplined trader does. So what I've done is I've followed these steps. I said what I did right. And what I did, where didn't I follow my plan? What caused me not to follow my plan? And what will I commit to tomorrow to make me disciplined in that same? So tomorrow I am a stop king, and I will demonstrate to the world how a stop should be placed and kept, okay, or adjusted according to plan, whatever it is for you. Okay, then tomorrow morning, what you're going to say in your trading journal is, I'm a wise and disciplined trader. Today I am the stop king. You're going to repeat the end commitment. Today I'm the stop king. I'm going to show the world how the stop is placed, and how a responsible trader does it the right way. Okay, so that is what you're doing. You're not letting a problem become a big problem by using your journal to commend yourself, admit to yourself, correct yourself, and go on as a wise and disciplined trader. And I always end every journal. I begin and end with the same thing. I'm a wise and disciplined trader, and I do the things that a wise and disciplined trader does. And you know something? The more you say that to yourself, the more you will be a wise and disciplined trader. And why? Because you're building neural pathways, and you'll have a nice gigantic neural net. Okay. And framing your trading as a business, I'm going to kind of skip this. Listen, your trading plan is your business plan. We've talked about this. Okay, so your keys: a sound trading plan, structure. Simon gave you that if you don't have one. Proper risk. And incidentally, Simon's stuff works as a complement to the trading plan that you have right now. So the price is so cheap, I can't, my mother told me not to say cheap, inexpensive. May she rest in peace. Anyway, his stuff incorporates. So have it into your present plan. So have a sound trading plan structure, proper risk and money management employment, reversing poor trading habits. We did a lot of detail on that. Effective self-analysis and response to journaling, and framing your trading as a business. Okay, here's my gift for you for attending. I want you to have, this thing was, I just checked today, and it's now we're over 250,000 times over the last 10 years, Mental Fitness for Trader ebooks have been, this ebook has been downloaded. So I want you to have a copy, and if you had a copy from 10 years ago and the pages are dog-eared, again, you'll download it and print it out, but it's about 30 some odd pages, and 17 is something if you print both sides. But go to the disciplinetrader.com/MF4T, mental fitness for traders. Okay, so MF4T. And this is really what I wanted to spend just 2 or 3 minutes on. This is something I've never offered, because when you opt in for that book, and when you request the Mental Fitness for Traders ebook, you'll be immediately taken to an offer for a free 1-hour 2-on-1 coaching session. And when I say 2-on-1, I don't want you to bring a friend, because most traders don't have any friends. And that's okay. Nobody understands this. They just want to know why we have the house we have. But 2-on-1 coaching is Tisha and I and you. You're the one, okay? And what we do in this, it's really a 2-month program that we talk to you every other week and so on. And it's explained in the page, in the thank you page. After you download this book, you're going to request the book, and it's going to immediately take you to the explanation of this new 2-on-1 coaching session. It's going to help you totally understand yourself first. And Simon started his presentation with this. I started my presentation with this, and you should start your trading reboot or trading journey with this. Who are you? It's much easier to amplify your strengths than it is to reverse your weaknesses. Because if you build the neural pathways that make that serve you as a trader, life is a lot easier. And if they happen to be strengths of yours, then you can actually find a trading plan and run a trading plan much easier, because it's more like you. Are you a swing trader? Are you a day trader? Are you a position trader? Got to figure that out, okay? And we're going to help you figure that out if you don't already know it. You could have been a swing trader all this time, and you really should be a position trader or a day trader. So we help you understanding yourself. Then we create, in this 1-hour 2-on-1 coaching session, we create a unique strategy plan to get you totally disciplined in your trading. In other words, you will leave this hour with a unique, that is unique to you, strategy plan to get you totally disciplined. Not a trading plan where to buy and sell, but a strategy plan to get you disciplined to overcome the weaknesses that are causing you to make the same mistake over and over and over again, whether that is no discipline, whether that's fear of losing, whether that's not being able to pull the trigger, whatever it is, or a combination usually of those things. And there are 12 or 13 things that we need to go through and ask you the right questions and get the feel so that we can create that union. And then we tell you how to go ahead and create those neural pathways, create those, your mindset so that that strategy will, and look at the last point. We're going to tell you exactly what to focus on and the techniques to use to move from your current mistake-making. I don't mean it, everybody's against, wherever you're at, and I'm not belittling it because I've been there, and most of us have. You don't want to be that out of control, lack of discipline guy or gal. You want to be a trader with total trading confidence. And to arrive at that, you have to identify yourself, truly get deep and understand where you are, who you are, and then identify a strategy of training your mind to complement who you are so that you can run your plan without failure and without making mistakes over and over and over again. So it's a free 1-hour coaching session. Why are we doing it? Because of those, of the people who take the 1 hour, they're going to get into our 2-month trading extravaganza coaching sessions where we work with you one-on-one for 2 months. And rather than a do-it-yourself kind of thing in a strategy plan, we coach you and we make you responsible. It gets done quicker, faster, and so on. It's kind of like when I buy something from IKEA. When I try to do it, it takes me 2 or 3 days to put together a dresser of 2 drawers. And but if I call the guy from the app that I have, where they come over right away, he can put it together in an hour and a half. So if you want fast action, then our coaching program is going to be for you, our 2-month coaching program. But I want you to consider this free 1-hour 2-on-1 coaching session that I'm offering you today. And that there's no special link other than using the same link there, thedisciplinetrader.com/MF, the number 4 and T. And so that you can, and then when you put your name and email address in to get the book, it'll immediately take you to the offer for the 2-for-1 coaching. I've already set that up. Okay. I have stopped my screen sharing, and I'm going to give it over back to you.
So I want to take this opportunity to thank each of you who are either watching it live or watching the replay for being here. We hope that what we covered with you today will have an impact in your trading life and in your life in general, and help you on your own personal journey to trading mastery and personal mastery,